Assist you sell way smarter.
Hello, everybody, and welcome back. This is a live Reno Sparks real estate market update for December 2021. So these are going to be statistics and numbers through the end of November. Just collected all of the stats and data and prepared our charts. And we'll go over those here in just a few moments. Before I do, I just want to let you know this is for the Reno Sparks area only, the main metro area, including as far north as Cold Springs, Instead, Lemon Valley, Spanish Springs. You go far south as East Lake, Washoe Valley, Pleasant Valley, Galena, DeMonte, and you go all the way out to the state line, Verdi, Mogul, Somerset, that area, and of course all the way to the east. Sparks Foothills. Does not include, Carson City, Minden, Gardnerville, Dayton, Fernley, Fallon, etc. If you have an interest in those markets and you would like more information, please don't hesitate to reach out. You can put a comment in the chat box and we'd be happy to contact you and get you that information. Now, speaking of markets and information, this is intended to be an overview of the marketplace and more of a 30,000 foot view, if you will, meaning it's just going to be stats and trends so that you can be better educated if you're thinking about selling or buying a home. If you want more specifics on your individual property, whether you're buying or selling, you can go over to forrenohomes.com. You can scroll down in the middle of the screen here and click the Find Out Now button and get a free, no obligation valuation on your property. We're not going to drive you crazy. We're just going to get some good stats and information so you can make the best decision for you and your family. So let's dive right into the numbers. The first thing we always look at is interest rates. Why? Because interest rates have the biggest impact on home prices. The lower the interest rates go, the more upward pressure you see on prices, and the converse or the opposite is true, meaning if interest rates go up, you start to see pressure on prices. So it's a good leading indicator on prices going forward. And if you look at the chart here, this goes all the way back to 2012, and you can see rates have remained somewhat stable between 3.5% and 4.5%. We did have a spike in 2018, and believe it or not, just 3 short years ago, we were advising our clients and our home sellers to be very aware of the slowdown in the market. They may want to look at prices. They may want to look at ways we can get their home sold because things were actually, believe it or not, stagnant. And shortly thereafter, you started to see interest rates fall. And of course, we've seen a historic rise in prices. Now, going forward, where are interest rates going to end up? Well, it's hard to say at this point, but I can tell you I do expect them to go up. Not dramatically, but I wouldn't be surprised if we touch 4+ in 2022. And the reason for that is the Federal Reserve is going to begin their tapering, meaning they're going to start buying less bonds and mortgage-backed securities and so on, which has artificially held interest rates low to spur on the economy and the housing sector. So they're already mentioning tapering, and maybe even a little bit early. And the reason they're going to taper is to slow down inflation. Inflation in housing and gas prices and just about everything you buy is through the roof. And so the only way to really slow that down is to contract the money supply, to raise interest rates, and to quit stimulating the market. So I do expect that to happen. I don't think they're going to go all in and raise interest rates extremely high because that will really put the brakes on an already, I want to say struggling economy, but an economy that's trying to get back on its feet after COVID and so on. So look for interest rates to rise, which, as we mentioned before, may put some downward pressure on prices or if anything, maybe stabilize them off. But we'll get into more of that later. Let's hit the headline that gets the most attention out there in the media and social media and news stories and so on, and that is the median home price. Now, this is for all of Reno Sparks. Is $535,000. Now, as I go through these stats, you'll see prior period here and you'll see same period last year. So prior period just means the month previous. So again, these are through the end of November. So the prior period would be the end of October. And then of course, year over year would be November last year compared to November this year. So last month, or excuse say in October, it was 540. We actually dropped slightly down to 535. So you're seeing that price sort of level off. But still up a crazy 18.2% from November last year, where it was 452,500. Now let's look at new listings that came on the market. So these are new houses that were listed in November. We had 370 total, which is down significantly from October, where it was 614. And that's not at all uncommon for this time of year. As a matter of fact, if you look at the chart, you can see normally we start to see listings come on the market starting in January, February, and hitting their peak somewhere in the spring, usually around May or June, before you see a slight fall off. Sometimes you get a little spike in September, October, which you see here and here a little bit here. So pretty normal as far as new listings. A lot lower than we'd like to see it, but certainly not out of the ordinary. As you can, matter of fact, year over year, it was 396 this time last year. We're at 370, so only slightly down from last year, but down almost 40% from October. And if you look at those new listings by price, most of those new listings are coming on the market between that 400 and 600, 650 range is where you see the majority of those new listings, which is actually where most of the sales are taking place as well. And we'll look at that here in just a moment. Let's look at active listings. Now, active is different from new. New listings just means a number of new listings that came on the market for that given month. Obviously November. This is standing inventory, meaning homes that are still on the market that are waiting to be sold. And right now we're looking at 400 on the market. That's down 32% from October, which again is not at all uncommon for this time of year. Normally once November and December hit, you start to see a slowdown in listings and sales because people don't like to sell their homes in the middle of the holidays and winter and so on. But it's dead even from this time last year at 400. So some stabilization there in the number of listings outstanding, but still significantly lower than we'd like to see. The normal period, a normal type of market, you'd like to see around this time of year at least 600 or 800 houses, and in more peak times, if you look back here, maybe 1,500. Now remember I mentioned 2018. Look what happened here in late 2018, early 2019. We had a spike in the number of active listings, which corresponds to that spike in interest rates. So you can see how it does have an effect on inventory and prices. And let's look at inventory by price. Now the interesting thing about this chart is we have the 400, same as last year, a little bit down from October. But what's interesting is most of the standing inventory is above 500,000. And if you were to back out everything, let's say a million plus, a million to a million and a half, 750 to a million, if you were to back out this upper end stuff, the active inventory on the market down here in the more sellable area or the more affordable area is probably closer to like 150 or so. So that's where we're seeing the disparity and why you see prices rise. Is there's plenty of inventory. I won't say plenty, it's still tight in the upper end price range, but it's the majority of that inventory is in the upper end price range, is not in the area that we need as far as affordable housing goes. Let's look at the number of total sales for November, 533, which is down from October, which was 570. So again, not at all uncommon for this time of year. Down 12.2% from this time last year, though. So down slightly from November of 2020. Closed sales by price, and you can see here, let me shrink this down a little bit. Most of your sales are taking place, and this is the chart I was showing you. Inventory by price. See all the inventory up here? You want to see the inventory more down here, which is where things are selling, and that's why you're seeing price appreciation in the lower price ranges faster and higher than you are seeing in the upper end, because you have all this demand at the lower end, but you're not seeing the inventory come online in that lower end price range. Now let's look at month supply. This is kind of a thermometer, if you will, of the market. So you've probably heard the term, if you've bought a house or sold a house, buyer's market, seller's market, and a stable market. So all a buyer's market means is buyers have, I guess, more of the power in the negotiations, because if there is a bunch of houses on the market and very limited number of buyers, the buyers can offer a little bit lower. They can get a better value and a better deal because there's a ton of homes for them to choose from. And the opposite is true in a seller's market. When there's very few listings on the market and a ton of buyers, which is where we find ourselves today, sellers can ask more. Sometimes homes get bid overpriced and so on. So you'd like to see this number right around 3 is about a stable market, which means there's about an equal number of buyers and sellers. We're right now at 0.8, which is down from 1 month. So all this means is however long it takes you to sell the active inventory through the market. So let's say, for example, you sell 500 homes in a month and there's 1,000 on the market, you'd have 2 months of inventory or months of supply on the market. So right now we have less than a month of inventory. So it's down, again, not at all uncommon this time of year. What is uncommon is the amount of inventory. Normally, again, you'd like to see this around 2 to 3, but we're well below that. And you can see months of inventory. What I wanted to point out is the upper end, you're actually more towards a stable market in the 1.5 million plus. Even down here, you got 1.5 months, 2 months of inventory, which is still a seller's market, but not as bad as you see down here, where there's only 0.3 of a month inventory between 400 and 500. A little over half a month's inventory at the. Let me scroll that down a little bit. the 5 to 599 or 5 to 600 market. And then let's look at one more chart before we wrap this up. And this is something I wanted to point out because everybody's heard the stories. Oh man, I put my house on the market and I got multiple offers and they bid over asking. It sold 20,000 over asking price and all these things. You've probably heard the stories if you're in the real estate and you're in the market to buy or sell a home. But that's slowing down significantly. And so the chart you're looking at here is the price received versus the asking price. So traditionally, if you go back the last 10, 15, 20 years, around 98 to 99% is common, meaning you ask a price, you usually get slightly less than that. So let's say you ask $300,000, you may get $290 or $295, you get slightly below asking price. That's pretty common. Sellers ask as much as they can get. Buyers usually come on, try to make a value, make an offer. But what we saw here was a massive spike, and it actually hit almost 104%. Now you think 104%, that's not much, but 4% on a $400,000 house is $16,000 over asking price. $500,000 is $20,000 over asking price. So you were starting to see overbid and prices go up, and you're starting to see that slow down. And the reason I bring that up is if you have a home on the market now, or you're thinking about putting your home on the market, don't expect. Now, this could turn at any time, of course. I don't expect it to, but don't expect to get multiple offers and 10,000 over asking price. And I think this is really a result of prices going up so high that sellers continue to try to ask more and more, and they're starting to hit a peak. So in my opinion, for a healthy, more stable market, this is a pretty good sign. Hopefully this stays around that 98 to 9900% range. So there you have it. The question is, where are home prices going? I do expect 2022 to be a very strong year. We're going to do a year in review and kind of a look ahead next month, so I don't want to say too much, but I do expect 2022 to remain pretty strong. I think you're going to see strong sales. I do think you're going to see some inventory start to build a little bit. I think you're going to see prices start to level off. I don't think you're going to see them drop dramatically, but I think as interest rates rise, as prices kind of hit a peak, I think you're going to see all of that slow down a bit. So there's good news in that if you're a seller, you can still get a great price for your property. It's still probably going to sell relatively quickly. If you're a buyer, it may have the opportunity to see more homes come on the market and potentially better values out there. So stay tuned if you want more information in the coming months about the local Reno Sparks real estate market. In the meantime, as I mentioned before, if you'd like more information about selling your home and saving a whole bunch of money, Assisted Sell can do that for you. We are a full service real estate company. We do everything you'd expect from a professional expert real estate agent, but for a fraction of the cost. Only $39.95 for homes up to $400,000. If you're over $400,000, it's only 1%. So really affordable to sell your home. And again, if you want a valuation on your property, please click that Find Out Now button over here, and you can see it on my screen here, and we'll be happy to send you a detailed report on what your home may be potentially worth. If you just want to call and chat about your situation and get more details, you can call us at 688-6060, area code 775, info@4Reno Homes, and we look forward to seeing you next time. Best of luck, and have a great holiday season. Bye-bye.
Assist to sell way smarter.